Hi everyone, Crypto Henry here, and in this video I'm going to talk about something very important that is emerging in the DeFi space. By the way, please make sure that you like and subscribe to my channel. I always talk about the coolest technologies in the world: DeFi, crypto, NFTs, and blockchain. So DeFi aims to mimic the traditional finance. Whatever we have in traditional finance, we also have it in DeFi. You want lending, instead of going to a traditional bank, you can go to Aave. You want asset management, instead of going to your asset manager or broker, you can go to Yearn Finance. You want an exchange, instead of going to Interactive Brokers or Binance, you can go to Uniswap. But there was something lacking in the lending space. In traditional lending, you can choose a float or fixed interest rates. And so far, most DeFi protocols that we have been talking about, including Aave and Compound, they offer float interest rates, both for the lender and for the borrower. So when you lend money on Aave or most of these DeFi protocols, you will have a yield that you are not sure if it is going to be the same yield in 1 month after. So let's say you are a liquidity provider, you are lending money on Aave and deposit ETH at 2% rate. Maybe 1 month after, maybe 3%, or it may be 1%. So when you deposit money into these lending protocols, you are not exactly sure what yield you are going to get. Now, in traditional finance, you can go to a bank and have a term deposit, right? You can deposit an amount of money for 1 year, and they will guarantee a specific yield for that 1 year. Probably it's going to be very low. It's going to be 0.1, 0.3, or something like that. But they will guarantee that for the term, 3 months, 6 months, 1 year, they will pay you exactly a specific yield. So can we do the same on DeFi? And the answer is yes. And in this video, I'm going to show you how to do it. And I will show you the DeFi protocols that offer fixed yields. All right, DeFi lending fixed rates. How do they work? All right, as we saw before, Aave, Compound, Curve, and all these DeFi protocols, they sit on the top of other blockchains. So we have an infrastructure layer, we have the lending protocol layer, and then you have a number of protocols that will offer you the fixed rate, the fixed yields. And some examples of these protocols will be BarnBridge, 88 miles per hour, Notional, ApWine, and I will also show you a few others. But the way they work is that you are actually not really lending to that protocol. You are depositing your whatever you want to deposit. Can be ETH, can be a stable coin, can be wrapped Bitcoin. You are depositing these assets into the fixed yield protocol. And then this fixed yield protocol will deposit your ETH, in this case, into a lending protocol, can be Aave, for example. They will receive the principal plus the float yield. So they will receive the initial deposit plus the yield. And you will receive the principal that you have deposited plus a fixed yield. And the way they pay the fixed yield is that they will have a yield pool, and you have token stakers that provide liquidity to these yields. And basically, they guarantee that you will receive a yield. Now, of course, for example, if this lending protocol over here, let's say this is Aave and it's paying 2%, they will not pay you a fixed yield of 2%. This is more like an insurance against yield volatility, and they will pay you, let's say, 1.5%. Just like in traditional banking, if you choose to receive the fixed yield, you will have a less favorable yield, but you have a guarantee yield, right? While if you go directly to the lending protocol, you may get 2%. If you go to the fixed yield, you get 1.5%, but it's guaranteed that you receive this. And that's the main difference. And you have here a few fixed yield protocols and their respective TVL. At the moment, the biggest is Notional, and after that comes 88 miles per hour, ApWine, BarnBridge, and honorable mention to Flashtake that is very, very small, not really tested, is very, very early days, but it provides something that is quite different from the other protocols that I'm going to show you in a minute. All right, so let me start by showing you Notional. Notion, as you can see here, they advertise that you can receive 3.173% fixed APY, and you can lend or borrow. Let's say in this case, if I want to lend and I want to lend ETH, I'll be able to lend 1 ETH and receive this fixed rate here. And probably this yield is lower when compared to if I go directly to the lending protocol, but it's guaranteed at least, right? And in this case, I'll deposit ETH and have a maturity on December 24. Happy Christmas. So I'll have to lock my ETH for a period of time. And again, you can explore the platform around, but I can lend and borrow at fixed yields, and you can choose here if you want 3 or 6 months. So 3 months will be December 24, 6 months March 24, and as you can see here, the March rate will be lower because it's longer period of time. 88 miles per hour is also quite similar, very nice user interface. You can come here and choose the asset that you want to deposit. Let's say, for the sake of the example, we want to deposit 10,000 DAI, and you can choose any term that you want. So in this case here, we have 10 days. So if I deposit 10,000 US dollars for 10 days, at the date of the maturity, you will receive $10,001.33. Of course, if you increase here, let's say 365 days, so they guarantee that you receive at the end of 365 days $10,049.26. So not much. Again, this is lower than what you will receive on Aave, but it's guaranteed, right? And you don't need to worry about the volatility of the yields. It's really guarantees that you receive this. Another protocol that you may look at is BarnBridge. Fixed interest rates in DeFi made easy. And at the moment, you can deposit DAI, and you have this epoch time. So this will be a deposit from November 11 to December 11, and they pay a certain yield. Another one very interesting is ApWine. ApWine will also allow you to lend and borrow with fixed rates. Again, you could choose a term, and so this one will be up to December 18 on ETH, and they will pay a fixed amount, a fixed rate of 2.07%. By the way, all these rates are annual rates. We're always talking about annual rates. Another interesting protocol is YieldProtocol. YieldProtocol, again, you can deposit a certain amount and receive a fixed yield in a certain date. And finally, an honorable mention to Flashtake. This is a very, very new and still very, very small, probably not battle tested DeFi protocol, but what this allows you is to do something similar to the other protocols that we have been talking about, but in this case, it will pay you the yield instantly and upfront. So you can come here to the Flashtake interface. So they pay you not only the fixed yield, but they will pay you the yield upfront. So I could, let's say, provide here a deposit of worth of 1 ETH. I can insert a duration, let's say 180 days, and this would allow me to instantly receive 0.03 ETH. So I receive the yield upfront and automatically. And then after the 180 days, I'll be able to withdraw the rest of my ETH. This is very interesting, and the more you deposit, the higher the instant yields that you receive. You can also deposit USDC. As you can see here, they show basically they are using Aave behind the scenes. I can deposit $10,000 of USDC, and I want to deposit for 365 days, and I'll receive instantly 1.44 USDC, not much, plus 22,400 Flash tokens as an incentive. Of course, this is most interesting when we are talking about ETH or wrapped ETH. So let's say you have some ETH and you don't want to sell it, but you need a little bit of money now. You can come here deposit your 1 ETH and lock it for 1 year, and you will receive automatically 0.06 ETH. How much is this? Let me see. 0.06166 times 1,350. So you'll receive automatically $83. Maybe you have some other investment that you want to do. Maybe you want to have some cash for yourself. You have some kind of bill to pay, but you don't want to sell your ETH. So you can use this to receive a fixed yield that is paid upfront. Okay, but very important, this Flashtake thing is a very, very recent DeFi protocol. I don't think it's battle tested. I'm not sure if it is audited. So please make your due diligence. Make sure that before interacting with these kind of protocols that they are really reliable, get involved in the community and check if they are audited and so on. All right, I think by now you can see the importance of these fixed rate DeFi protocols. Basically, they allow people to have more security regarding the rates that they receive in the future, because if you don't like uncertainty and you want to make sure that you receive a certain yield, probably these fixed rate DeFi protocols are ideal for you. If you are okay with a bit yield volatility, then you can go directly to the lending protocol and provide liquidity or borrow from these lending protocols, but without being sure that you are going to pay the same yield or receive the same yield in the future. This is very common in the traditional financial markets, right? If you go and get a mortgage loan to buy a house, you can choose a float interest rate or a fixed interest rate. If you choose the float interest rate, you are going to pay less at the beginning, but if the interest rates go up, like they are going now because the Fed is increasing the interest rates, you are going to pay way more in your monthly repayments to repay the loan. If you choose a fixed interest rate, at the beginning, you will pay a bit more, but once the rates start to go up, your rate will not go up because it's fixed. So it provides more security, and in the same way, now you can do the same using DeFi. All right, I'm sure this video was useful, so give it a like and subscribe to my channel so that you don't miss this cool content about DeFi, crypto, NFTs, and the coolest technology in the world, blockchain. All right, I'll see you in the next one.